Permission for what?
I don't know. Were we talking? Listen, it is Cern Basher, in case you don't recognize him. I'm just, the guy that comes along for the ride. Yesterday, Cern, were you watching the call live?
I wasn't watching it, but I was listening.
Oh, listening. Okay, listening to the call live. Do you keep a chart of the stock so you can watch as the call
No, I
goes?
don't. I don't worry about the stock price too much.
Oh, you don't? Okay. I always find it interesting. I'm more like intrigued by what happens. So it went steadily down during the call.
Yeah.
If you were aware of that, it just kind of steadily down. There was no like moment, unlike a couple of folks out there who think there were moments when it dropped. It was steadily down almost from the first minute. When you were listening to it, were you thinking, wow, this is going to destroy the stock today?
I didn't think it was going to help, that's for sure.
Okay.
There are certainly a number of headwinds that Tesla is facing that were discussed on the call last night, that I knew that Wall Street would not be too excited about,
Okay.
right? They range from, the ongoing weak global auto market,
Mhm.
tariffs, right, and the impact of those. And
Right.
there's clearly a headwind for both the autos and energy on tariffs, although, again, Tesla has a solution long term for those,
Mhm.
or at least it would be minimal impact long term. The EV credit going away while it juices Q3.
Yep.
Elon's talked about, Q4, Q1, Q2 of next year being potentially a little rough.
I did, by the way, this morning offer Elon an opportunity to hire me. I come cheap. If he doesn't know how to get the sales up in quarter four, I've been doing that all my life. So if he's confused about how to get
Yep.
that happening, I'll be happy to come join the team.
The tone of the call wasn't too exciting. I mean, Elon likes to rehash his statement about Tesla being the most valuable company on the planet if they execute well. He dialed back optimist expectations,
Yeah, that's true.
which to me went down to ridiculously low numbers. After just 2 quarters ago, him talking it up
Yeah.
and talking about how it was going to be the most, aggressive ramp of any product ever. And, you know, so that's puzzling to me. Does it have something to do with his new comp plan and just kind of keeping expectations low? Maybe.
It's been suggested.
Yeah. Um, Again, I don't think he's doing it for the money, but he's doing it for the control,
Yeah.
right? Which is an important distinction. Um, they let the cat out of the bag. They told us the new low-cost model would look like the Model Y.
I have not gone back yet. I should have. I actually even had time this morning to do it and I haven't. I want to go back and listen to the way he said it.
I did.
You did. It sounded to me like he was laughing while he was saying it,
Yep.
as if he was saying something ironic.
Well, he was sort of talking at the same time as somebody else, and he sort of said, let's go ahead and let the cat out of the bag. It's going to look like the Model Y.
But wasn't he laughing when he said that? Wasn't he
Yeah.
Yes, he was
Yeah.
being, he was being catty. He was being, I think he was not necessarily letting the cat out of the bag. Do you follow my thinking? He may have been pretending or acting or having a good time with the idea that he was letting
Well,
something,
maybe, although I think it's consistent with what we've seen. We've been saying all along, if there's new models, how come we haven't seen them?
right?
Well, we have,
Okay.
right? Um, and it's a more affordable model. It's not necessarily a new vehicle, it's just a more affordable
Right,
models,
right,
right? So it all makes sense to me now. There's certainly no rush to introduce it in Q3, as
right,
long as you've got the EV tax credit.
right.
Sell as many Model Ys as you can, make that as attractive as you can for folks, and then come Q4, start selling the other models.
What do you think? I've always said about the Model Q that, I always use the Mercedes E200 or C200, whatever it was called. I think that was what it was called, the first low-cost model that they ever introduced, as an example where they came out with a completely different form factor. It did okay. It never did great. But it was a completely different form factor because they didn't want to interfere with the kind of the folks that bought the expensive ones wanted to look different. if you take that out of the mix and Elon maybe doesn't care about the uppities thinking that their car looks better or whatever, do you actually think there is a difference in terms of the TAM if the car looks like a Model Y or looks different than a Model Y? As long as
Probably
that's
not.
30,000.
Probably not.
Yeah, I don't think so either. I don't think I
Yeah.
don't make a dime's worth of difference in the sales.
Yeah, I mean, that remains to be seen. I mean, it's certainly there are a lot of people that can't afford the Model Y as it is today.
Right.
So find a way to make that more affordable, like they did in Mexico. You're going to reach certain customers. Well, some customers who reached up now just, reach down, maybe. Now, the good thing is I think that everything they sell, and they made the point of saying this, is robotaxi ready.
Right.
So again, I've said this many times, I don't care about car sales anymore.
Right.
Right. And the more affordable models, great. For the people that are buying them, awesome. If a Roadster ever comes out, awesome for the people buying it. I want you to have one, right? I love my Cybertruck. It's the best vehicle I've ever had.
Yeah.
None of that matters
Right.
in the world of autonomy. Now, Tesla has to produce the vehicles that they can use in the robotaxi network, right? And they're doing that, and the Cybercab obviously is the
Right.
key vehicle there.
100%. Yeah.
Yeah.
Yeah. All right. Okay. All right. With all that introduction, I'm just guessing that maybe you have something more to say about that, and you're going to dress it up with some cute slides.
I have some nice slides for you today. Yeah. Can you see my screen
I
here?
can see that.
Great. So I thought this was, a beautiful image from the shareholder deck. I thought I would make it my cover photo for the slides.
Yeah.
And of course, I've got to have Cybertrucks. So here we go. We've got the Cybertrucks and the diner all in one photo.
That's right. That's right.
It's called Killing Two Birds with One Stone.
I suppose. And there was quite a nice video I saw. I should have probably put it up on the one of the shows where they did a light show at the diner.
Yeah,
That was a lot of fun. That was killing two birds with one stone also. Yeah.
that's right. And then here we have a revised disclaimer in Old English,
It's
because I know the folks that watch your channel probably are pretty well versed in this language. Very, and not because they might be older, it's just because they're super smart and, can understand English in all its forms.
Yes, absolutely. It serveth only as a general knowledge. So denial is a much better name for it anyway.
Yes.
Yeah, yeah.
Yeah, I may have to stick with this one from now on. I quite like it. Okay. So this is kind of cool. Sometime this quarter, Tesla is going to surpass the $500 billion of cumulative revenue
Oh, wow.
milestone.
Okay. Wow.
Wouldn't it be cool if you got your car and Elon's there and it says, because of your car, we've just crossed $500 billion of revenue.
Maybe they'll give away that car.
But then they wouldn't cross the revenue mark.
Oh, that's right.
It defeats the purpose of, yeah, meeting the goal. In that case, they actually have to charge you for it.
Right.
Maybe the next guy gets his car for
Right.
free, and then the guy that crossed the $500 billion is not very happy. Yeah, this could be pretty vicious. But this looks like progress to me in some ways.
Yeah.
Right. Now, maybe the bars here on the right side could be getting a little higher, but that will come.
Yeah.
Um, Here's cumulative gross margin. So $500 billion in revenue
Mhm.
and about 100 billion in gross profit.
Okay.
Getting close to that. And again, sometime in Q3 we'll cross that mark and we'll find out.
Is that 4%?
It's 20%.
20%. No.
Yeah.
Oh, gross revenue, gross profit.
Yeah.
Okay, 20%. All right.
Yep. And then we've got operating income.
Okay.
Okay. So that's pretty nice. And you can see in the early days, losing money, and then all of a sudden starting to make profits and then hit a nice curve and had a nice growth period for a while. In recent years, it's been more challenging, but we're still headed up to the right.
Yes, yes.
Okay. Net income, over 35 billion, approaching 40 billion in net income.
Net income. Okay.
Okay. So that's progress. So For those that didn't like the earnings report, and for those that focus on autos, and those that focus on earnings and the growth rate and the declining growth rate and declining profitability, blah, 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 they're missing something, right? What you're missing is a company that's investing heavily in its future for products that they're not currently selling,
Right.
right? You've got this existing company that's masking a whole new business or two or three or four that they're investing in today to get them to, future revenue streams. Here's part of the evidence of that is growing R&D. They've now spent over 25 billion in R&D costs.
Well, yeah.
Okay. And I love these charts that show these cumulative numbers because it gives you a perspective that no one shows you. Even Tesla doesn't show you this.
Right. Exactly.
And no one on Wall Street does because they're so busy looking at quarter-over-quarter changes or year-over-year changes and all that stuff. Step back even further. Okay.
Yeah. And CERN, I've talked about it a lot on my show, talked about it in the book, return on invested
Capital.
capital. That's the word, capital. Return
ROIC.
ROIC, which is a number that a lot of people don't pay any attention to. Tesla is at the top on this concept. Apple, I think, is still ahead of them overall, but they are way, way, way up at the top in terms of companies on this metric. We've got companies now, the other hyperscalers in the AI business that are spending dramatically more money than Tesla in order to try to win the AGI war. And yet Jensen Huang repeats over and over and over again that it is the embodied AI where the money's going to be made.
That's right.
And the embodied AI is Tesla, and they're in the lead. Nobody questions that they are far in the lead when it comes to embodied AI.
Yep. Yep. And in the meantime, they're focused on how this spending, by the way, reduces earnings.
Right.
Okay. The CapEx, you get to capitalize it. You get to put it on your balance sheet and you don't expense it right away. You depreciate it over time.
Right.
But R&D, that $1.589 billion that was spent on R&D in Q2, that reduced earnings
Right.
by that amount. Right. And people are forgetting that this is something, this massive increase in spending for this future that they're driving towards is reducing near-term results in a big way.
Right. And that is about 50 cents a share.
It's not a small number.
Right.
Right. And then CapEx, okay, you get to put that on your books as an asset and depreciate it, but there is depreciation charges that reduce your earnings as well.
Right.
Tesla is a capital-intensive company. They have to build factories to make heavy automobiles. It takes a lot of effort, time, money to do that. But this is a company, you look at this chart, this is a company investing in its future.
Right, exactly. And the other companies, the other car companies are investing similar amounts of money, but they're only putting it into aging factories and aging products. They're not putting it into AI. A huge percentage of what Tesla's doing is putting it into Dojo and into the Cortex data center. That's where the vast majority of their CapEx is going.
You're exactly right. It's not how much money, it's where you're investing it.
Right.
That's critical. Yeah. And I think by any objective analysis, I don't care who you are, if you look at this objectively, Tesla is spending it in the right places. Right. Now, put the two together. They're approaching $80 billion of combined CapEx and R&D. Right. A massive amount of money. And this shows no sign of slowing down.
Right.
I'm slurring my words. I haven't had anything to drink today, even though I'm excited about Tesla.
I heard you were very excited about Tesla this morning.
Yeah. Yeah. I love it when investors who don't understand what's happening give us an opportunity to buy the stock at lower prices.
So you bought a share or two.
Fistfuls of shares.
Fistfuls of shares. You're the reason that it went up a buck.
Could be. Yeah, I should need to be more careful with my trading activity. Yeah. So what we have then, Randy, is this spending on building the business for the future is a drag on operating cash flow in green.
Sure.
Okay, now this is quarterly. The quarterly numbers are always lumpy. You always it's always better to kind of smooth it out.
Hmm.
But what I wanted to show here was the operating cash flow by quarter versus the CapEx by quarter, and how carefully Tesla is able to manage their CapEx so that they don't get into a negative free cash flow situation. So this quarter it was very close.
Right.
They had enough operating cash flow to pay for the CapEx, and their free cash was 140 million or something,
Right.
146 if I recall. The prior quarter, even though it was a low quarter in terms of operating cash flow, they dialed back CapEx a little bit in that quarter. And the prior couple of quarters, it was a lot higher, and operating cash flow was a lot higher.
Right.
So it's a very well managed company in that respect. Sometimes hiccups happen where it's not in their control. And this, I think, was the whole issue around shipping through the Red Sea and the Suez Canal and so on, and having to route ships around Africa. It
Right.
caused a hiccup in that quarter in Q1 of 2024.
And yet on the other side of the coin, Elon is so conservative that he considers, $37 billion in the bank to just be, normal.
Yeah,
He doesn't really want it to be lower than that.
that's right. Yeah, it's a healthy amount of capital, particularly for an automaker. But
Yeah. Yeah.
yeah. So this is the same chart, the cumulative chart for free cash flow. So in the early days of building a business, you hemorrhage cash. You're
Right.
building the business. Eventually, you get to enough scale. You start to make money. You start to build up some free cash. And Tesla had a nice run here, and they're now over 15 billion of cumulative free cash flow, right? Since inception. So, but this is actually very impressive given the fact that they're investing so heavily.
Right. Right.
Normally, you would actually expect them to be in this situation back here
Yeah.
on the
Yeah.
left side. Okay, so that's actually very impressive. It could easily be the opposite. They could easily be free cash flow negative right now as they're investing money.
Hmm.
Um, Wall Street wouldn't like that, even though Tesla would be more aggressively building their business.
Right.
So they're doing it in a very prudent way. They're maintaining positive cash flow all the while investing heavily in their business.
Hmm.
Okay. So that's my sermon on that. My overall takeaway is we're witnessing a company investing heavily in its future. And depending on what you're focused on, near-term profit or that big long-term future, you're happy or disappointed with the earnings results and the earnings call.
Right. Right. Right.
As simple as that.
Yeah. Yeah. I said it this morning. I'll say it again. You either believe robotaxi is going to roll out 2 years. I don't know. Maybe it'll be 2 years. Maybe it's only a year. Maybe he really is addressing half the U.S. population by the end of this year, and maybe he's got 2, 3, 4, 5,000 cars out there to do that. I don't know which day it's going to be, but either you believe that robotaxi is going to be a competitor and probably take most of the business in the U.S., or you don't.
Yeah, and we'll get the next data point on that in what sounds like a couple of weeks in terms of
Right.
the next expansion of the Austin operating area,
Hmm.
geofenced area in Austin. There's some indications that it could be quite large.
Yeah, 450 miles, 450 square miles was what somebody estimated today. If it's 10x the current
Yeah.
space. Yeah,
Joe Techmeyer suggested it should be in the shape of a Cybertruck,
I see. There you go.
which I approve of that shape better than the last one, but still fun, still gets attention without.
Absolutely, be
Yeah,
great. I hope they do it.
yeah. All right, just to run through some things real quick. Components of revenue, we've got autos here in red. We've got the energy business in green. We've got services and other in yellow, and then the regulatory credits in blue.
Hmm.
Okay, so you can see how those have bumped along over time. As a percentage of the total, we now have autos accounting for just a little over 70%. A little bit less than that last quarter because of the shutdown on the Model Y production. So the other businesses were a greater percentage, but they're still trending towards those businesses becoming an ever larger share. But
Sure.
it's around 30% non-autos, 70% autos.
Yeah.
In terms of gross profit, here's the numbers there. We've got gross profit for energy and green, and you can see initially that was, negative, and now it's positive and it's adding to it. Same thing with services and other. And of course, the regulatory credits, because it's basically pure margin, that was always, a nice gross profit there. And then from a percentage basis, this is just looking at energy versus autos, just to highlight energy a bit more. You can see that energy's accounting for an ever larger piece.
Yep.
And as a share of the total, autos now is about 65% of gross profit for the company.
Okay.
And then here's gross profit of energy versus autos. Autos is under 80 and energy's, mid 20s. All right. In the early days of Tesla, their operating expenses were huge, and that was what was limiting the profitability. Then you get to a certain point where you have enough scale, and the operating expenses as a percent of the revenue declines.
Right.
And they got it all the way down to, 7.5% or so, 8%. And in the last couple of years, that started to go back up. One of the reasons for that is the cost of, the R&D, the cost of employees, is going up all the time, right? It's a competitive marketplace, particularly in AI.
Right.
And so, and again, this is also an indication that they continue to invest in the company for the future. They're building that team. They're investing in R&D. So these operating expenses are going up. So Wall Street doesn't like that, right? But it's also the fact for every single large cap tech company these days is that they have to spend more and more attracting talent and building their business.
Right.
So these things kind of ebb and flow. In Tesla's case, once they start turning on robotaxi revenue in any serious amount, they should get some economy of scale again, and this should start going down.
Yeah, and I would think that also that as energy becomes a larger piece of the pie, that is not requiring as much R&D, doesn't require as much capital expense, and when they're building out new factories, and doesn't require these talented individuals as much as the AI side of things does.
Right. Gross margins, net margins, I mean, they went up this quarter versus last quarter, but nothing to be too excited about here. Again, if you're focused on short term.
Yeah.
Auto gross margins, an improvement on whichever metric you prefer to look at, with or without reg credits. Wall Street looks at the gray line, and that was a nice improvement.
Right.
Okay, but again, still down from where it had been, but maybe stopping this downward trend. Although maybe the next couple of quarters, well, Q3 should be pretty good because of the demand.
Yeah.
But Q4, Q1, Q2 next year, we could see some challenges here still.
Unless he hires me.
That's right. Yeah. And then the gross margins of the different business lines. We've got energy now at 30% again.
Oh, yeah.
Right. And then the blue line is autos, and the red line is services and other, just making a little bit of money, which is what they intend. That they're not trying to drive this too high.
Right.
Okay.
Now,
so
of course,
energy's,
if they have 400 restaurants around the world, that number could go higher.
It could. Yep. And the supercharging network, as it matures, it could get some economies of scale there. Although, again, they're not trying to maximize profit on that either. Average selling prices versus the cost to make. A little bit of a tick up here. Again, new Model Y helps. Maybe greater FSD uptake. They said it was 25% increase, I think.
Yeah.
In that. So that helps. That's pure margin. And the cost went up a little bit, maybe some tariff impact, et cetera.
So if I was the sales manager, this is where I'd be concentrating. So there was a lot of criticism today on X, I noticed, of people saying, what do you mean 50% of the people who own a Tesla have never even tried FSD? What do you mean a 25% increase in the uptake? What do you mean, Randy, when you're driving down the freeways of Los Angeles and you peek into people's cars and they've got their hands on the wheels 85% of the time? This is a missed opportunity. I'm not sure if they're just not paying attention to the reasons. I've talked about my reasons as I went through the process over the last year of well, it just messed up too often. And I just went back to, wanting to drive again. I was not confident. I was not comfortable. And then I tried it again, but a lot of people, they don't try it again. So one way or the other, there should be some kind of incentive. This is every time somebody buys FSD or actually starts using it and paying the $100 a month, you're talking about the equivalent of selling a car.
Yeah. I think what they should do, Randy, is, as you know, they get data from all their vehicles.
Yeah.
They could monitor your driving and say, Randy, you have not been driving very well lately. We're just going to take over now.
That'd be good. Yes. We highly recommend.
We highly recommend before
The
you
safety of
crash.
your
Yeah,
family and
that's right. So these two numbers, how that works out is profit per vehicle approaching $6,000
okay.
in Q2. Okay, again, a far cry from where they were for a period of time, but better than where they'd been the last couple of quarters.
But as everybody points out, we have to take away the COVID years. It's just not fair to
Yep.
use the COVID years in comparison. Now, the pre-COVID years back here where they were making, 9,000, 10,000, 11,000 prior to COVID, yeah, I think it's absolutely fair to look at those years and say, hey, how come we've fallen below those numbers?
Yeah. Again, if you look at it through an autonomy lens, the more vehicles you put out there in the fleet, then the bigger autonomy can become
Right.
sooner. So you're not necessarily so focused on making profit on the vehicle sold. It's like the razor blade model. Give away the razor or sell it for a very low price,
Right.
make up the money on the razor blades. Same kind of idea, sort of the same concept applies here too. So, Elon has said that they're not that really worried about trying to, super maximize this. I don't think their goal is to get back up to 10,000,
Right. Right.
you know. All right, energy costs, revenue versus cost of kilowatt hour deployed. Massive downtrend long term in both the revenue per kilowatt hour and the cost.
Mm-hmm.
But you can see that because the margins now are at 30%,
Right.
there's a nice spread between the two lines,
Right. Right. Right.
right? So, very challenging environment, but they're managing it extremely well and making some nice profit doing it.
Right. Yes.
Okay, and just to smooth things out here, I'm looking at trailing 12 months. It's showing quarterly, but each number is a trailing 12-month
That's
number.
good. Yeah. That's
Otherwise,
perfect.
it gets really bumpy
Yeah.
because energy deployments have been pretty bumpy.
Once again, I hate to keep mentioning the Elon Musk mission, which everybody should read as a course in how things run at the company. But we projected back in the Elon Musk mission that the costs of these batteries would be coming down, and as they have, yeah.
Yeah, and then here's again the history of the margins. This gives you a longer term perspective in terms of where they were. There was a time when they were pretty good, and then they went way negative. Some challenges, but in recent years, they've really pushed this up. Now, this business may well be hurt the next few quarters with tariffs, but once they get more domestic production, LFP batteries produced, that should mitigate that issue a bit.
Yeah, I did hear them saying in the call though that the tariff issue on the batteries was something that the customers got. They
Yep.
understood it. This is, of course, is only going to apply to U.S. business. And I know that there are some, I mean, not no, no is not quite right. I would say it's probably 80, 90% certain that there are aspects of the contracts that take into consideration the changing costs of battery materials that helps both the customer and Tesla
Yeah.
as we have these erratic moves in raw material costs. Well, I would have to think that tariffs are similar in that regard. That is part of the raw material cost. So I think they're protected in some ways regarding this.
I think so, and I think the ROI for people deploying these batteries is way more than the extra 10% cost or whatever it might be on some of these systems. So, most of the buyers of these don't care, particularly if it's being used for an AI data center.
Right.
That's mission critical. You're going to pay whatever price you have to get that in there.
Exactly.
Energy cumulative gross margin, we're now approaching, we're over 6 billion. So making nice strides there. And actually, this quarter was the highest gross margin amount in dollar terms
Okay.
ever for energy.
Okay.
Okay, I haven't heard anybody talk about that.
Right.
Um,
I
and
also
then this,
I also think that people are not taking into consideration that the lumpiness being a little low this quarter probably implies lumpiness going the other way, maybe by a lot in the next quarter.
yes, and actually, this chart maybe speaks to that a little bit.
Okay.
So reported revenue in green,
Okay.
quarter by quarter. Okay, so you can see that for energy, it's, a little bit down relative to a couple other quarters.
Mm-hmm.
I track something called indicative revenue, which is the combination of reported revenue plus the change in deferred revenue plus the
Right.
change in unsatisfied performance obligations.
Right.
Right. And without getting into too much detail, those are all elements of the revenue picture for Tesla Energy.
Mm-hmm.
But reported revenue is what they can report today based on deployments. The other one is kind of more indicative of what they will report at some point in the future. So if there's a positive spread between these two lines, that means they're kind of putting money in the bank
Right.
that can be that will be shown later as revenue and profit. And we don't know exactly when, but it doesn't matter that they're putting money away for the future
Right.
that'll come back.
Right.
Okay. So if we look at now trailing 12 months, I'm smoothing things out a little bit now with this one.
Mm-hmm.
The difference between reported and indicative is over $5 billion,
Wow.
right? This quarter. Now, the prior quarter it was a bit more. It's come back a bit. So there's lumpiness quarter to quarter.
Right.
Like this here was exceptional
Right.
in Q1,
Right.
right? So that was a tough comparison there, but there's still, a massive difference. Now, one of the things that I just noticed, and this isn't perfect, but you can see here for this Q4, Tesla reported about 10 billion, while the indicative revenue about 4 quarters earlier was about 10 billion.
Mm.
Here it was close to 11. It was 11.
Yeah.
Here now this was showing, almost 13, and this only came at 11. So this, I'm not suggesting this is a perfect metric that it's always sort of 4 quarters.
Right.
Well, actually, I'm sorry, that was only a few quarters, but either way, it's indicative of higher future revenues to come,
Sure. Sure.
albeit lumpy.
Right.
Okay. Haven't been able to figure out the magic number here yet, but
Right. Right.
continue to track it and continue to be encouraged by it.
I just ask Rock.
Yeah, well, I don't think Grok will help me with that, but I guess we can try. Maybe Grok will know. Anyway, so here are the changes on a quarterly basis of deferred revenue. So deferred revenue is growing, sometimes it shrinks. And then the unsatisfied performance obligations in Q1 was huge. This quarter it was more modest.
Right.
But again, that's consistent with prior fluctuations.
Mm-hmm.
Okay. And then here it is, the total balance. We've got over 12 billion of deferred revenue that's not been recognized yet,
Right.
and unsatisfied performance obligations, which is also revenue that's not been recognized yet.
Right.
Now, if you recall, this 12 billion, Randy, is more than a year's worth of current
Right.
Tesla energy.
Right.
Okay, so they've got a year plus worth
Right.
of revenue kind of sitting there on the side waiting to be recognized. So Tesla Energy is in a strong spot. The lumpiness makes it tough, but long term, this business is headed in the right direction. Now, these unsatisfied performance obligations, part of it is short term, it'll be recognized this year. That's kind of the pink area. Okay, and then you can see there's a decent chunk there. And then part of it, sorry, that's long term. And then short term is the darker purple.
Okay. Okay.
So that's becoming an ever larger piece. So more and more of this unsatisfied performance obligations is short term. It's going to be recognized in the next 12 months. But there's still a pretty decent chunk that'll be more than 12 months out
Right.
before they recognize it.
Yeah.
Okay. And that is over $10 billion, just that alone. The combination of the short and long term.
Sure. Sure.
All right. That's Tesla Energy. Now let's take a look at services and other. This business over its lifetime is 1 quarter away from making a profit cumulatively.
Oh, okay.
Okay. So here's the zero line here. I think we're about 1 quarter away from that business turning a lifetime profit.
Huh.
We're 1/4 away from Tesla making $500 billion in revenue. We're 1/4 away from Tesla earning a lifetime profit on services and other. Likely. Again, who knows, but likely.
Yeah, and if they ever cared, they could, really turn that up by putting solar panels, over all of the existing facilities, adding megapacks to all the existing facilities, raising the price just a little bit. I mean, there's all kinds of things they could do if this was important to them.
Open diners in every city
That's
in the
right.
country.
Or something. Or something. It doesn't even have to be as elaborate as that diner.
Yeah. And here you can see margins kind of bumping along, between 4 and 8%. Better than hemorrhaging money like it was in the early days.
That's right.
You don't want the business to hemorrhage. You don't need it to be a profit hero, but you just don't want the hemorrhage.
Right.
Here's the combination of energy and services and other. Lifetime profit of those two business units is over $6 billion. Mostly, obviously, driven by energy.
Sure.
All of it. But $1 billion contribution last quarter to gross profit just from those two business lines. Okay. So, as they say in math class, that's not nothing.
It's not nothing is right.
All right. And then this was kind of interesting. This is the services and other business, the quarterly revenue per vehicle. So what I do here is take the revenue for the quarter in this business and divide by the cumulative number of deliveries.
Okay.
Which is overstating the number of Tesla vehicles out on the road because many of them have, not in service anymore.
Sure.
But it's running around $400 a vehicle per quarter. So every Tesla vehicle is paying Tesla about $400 a quarter in services and other revenue. So that's maintenance, supercharging, Tesla shop, whatever it is.
Insurance. Yeah.
Insurance, diner.
Yeah.
Yeah. So, and that's been coming down over time, and that makes sense. The costs of services and other have come down in terms of cost of supercharging, the cost of those things. And of course, the fleet size has been growing. And again, because I'm using this denominator that's very conservative, that's going to pull that down as well.
And do we know whether or not the FSD subscriptions go in this pie or go in the auto pie?
I would imagine it would be in the auto pie. I don't know for sure, but that would make sense to me.
Yeah.
Otherwise, I think we would be seeing a more of a margin contribution here.
Yeah. You would
That's
say.
my guess.
You would think.
Yeah. Supercharger stalls, we now have over 70,000. Pretty phenomenal.
Yep.
We now have, and here's the cumulative, just the trajectory of that. And then here's the cumulative vehicles delivered versus total supercharger stall. So the ratio of the two. So there's there's more than 100, almost 120 vehicles for every supercharger stall in existence. Okay, so if they all went to the charges at the same time, there'd be a problem. There'd be 120 cars deep at each one. Right. Same thing with the gas pumps, right? When there's a hurricane, everybody's going to the gas station. There's a line 120 cars deep. Same idea with this. Now, fortunately, most people charge at home.
Yeah.
And the superchargers don't have that kind of congestion.
Yeah.
Okay. Here is the quarterly vehicles delivered per new supercharger stall.
Okay.
And that's been running, again, around that same number. So this is maybe 130. And the average for the entire fleet is now approaching 120.
Okay.
So that seems to be maybe leveling off a little bit. Sometimes it's higher. And then here is their largest supercharging site, 168 stalls.
Right.
And it's powered by solar and Megapack.
Yes.
So that's pretty sweet when you can use Tesla energy, solar, and the supercharging business all in one synergistic package. I hope we see more of this.
Yeah, and once again, we have to think about this holistically. Is that now the actual cost of the kilowatt is really, really low.
Yeah.
But the cost is showing up in that CapEx. and
Yeah.
is being, taken out as a piece per month. And a good way to account for this would be to actually figure out what the CapEx is for that facility and divide it in some way to see how much money they're making, on this energy production compared to what they would be paying for energy from the grid.
Yeah, to the extent they can do this at scale, which, will obviously take a while, it should be a massive positive on margins over time as as you've amortized that lifetime cost, the incremental cost of this energy is virtually zero.
Right.
So it should be a margin contributor. But again, they've just sort of started doing this, so it'll take a while. Um, Now, this has 168 stalls. The average supercharging site has about 9.5 stalls per
Oh,
station
all right.
and trending up as they're building larger and larger ones.
Yeah, yeah.
So that's kind of interesting. And
Mhm.
it, made a jump here in 2017 from 7 pretty quickly up to 9. So, of
Right, right.
course, back then didn't have as many superchargers. All right. Um, Regulatory credits, zero emission vehicle credits. It's come down over the last 5 quarters.
Mhm.
Okay. And now it's kind of taken a little bit of a fatal blow
Right.
with the US, a good portion of that going away. Um, but in the last 12 months, it's still about 2.5 billion of revenue. Okay. And cumulatively, it's over 11 billion, approaching 12 billion. So again, it's not nothing.
Yeah.
And what I like to do is compare it to their CapEx spend
Hmm.
every quarter, and the blue is the reg credit revenue. The red is the remaining CapEx. Um, and I like to think of it as Tesla's competition helping fund Tesla's
Right.
expansion,
Right.
right? And that's been an amazing thing while it's lasted. And here it is here. Competitors have funded essentially 26% of Tesla's total CapEx since 2018.
Hmm.
Okay, and Tesla has had to come up with the other 32 billion since 2018. This isn't going back to 2012 like the other numbers. This
Right,
is
right.
Q3 2018. And by the way, they tell us in the 10Q
Hmm.
what they expect for future regulatory credit revenue. Last quarter, this was over 4.5 billion. It is now 3.5 billion.
Right.
So that's been the change in expectations. Now, will it go down further? Maybe, but Tesla is still going to receive some significant chunk of revenue from this before it's said and done.
Okay.
Another way of looking at this is Tesla gets this money, and they've spent, 9 billion on compute in the history of the business, and they've received 11 billion in regulatory credits. So basically, their entire AI compute spend has been paid for by the competition. So that's kind of another interesting way to think about it,
Yeah.
right? Um, you know, Obviously, that's functionally not the case, but just if you compare the numbers, you could sort of make the case, well, that's kind of nice. The competition's paid for all this. The competition has created self-driving cars to put them out of business,
Right. Exactly.
right? And then this is the last slide, and there's the regular disclaimer in case people couldn't read the first one.
I see. You wanted to make sure that was, thank you very much for disclaiming and also, what was it?
Denial.
Yes. Yeah, I think getting both of those in at the same time, make sure that your compliance people are happy
That's right. No, you've got to keep the compliance people happy at all costs, Randy.
at all costs. Yeah, I wonder if the new drop in the new administration's emphasis on reducing regulation would have anything to do with the finance industry. Are we going to reduce regulations on financial disclosures and financial, like people hanging on every word you say?
I have no expectations about that at all. It'd be a pleasant surprise if some of that loosens up. Yeah.
For sure. Well,
But, overall, to me, Tesla's continuing to make the progress that they need to make. They need to continue to build out the AI infrastructure, FSD, robotaxi, Optimus. If you care about quarterly earnings, you could be disappointed. But ultimately, at the end of the day, what are we looking for? We're looking for a company to build a bigger future, and that's exactly what they're working on.
Exactly, exactly. And again, nobody has been promised recently. There's been no actual expectation of car sales being at any level. Elon gave us earlier, he gave us a number, he said, this is what I expect for a number of years. And then he said, hey, look, it changed.
Yeah.
We have these reasons why it changed. And he's not reestablished like a 20 million vehicle number for the end of the decade or anything like that. So we are now in a new age where the company changed its stripes. It's now an AI company that specializes in robotics. This is the way he described it. I think it was 6 quarters ago. And the robotic part of that company just got released a month and a couple of days ago.
Yeah.
So now we get to watch the chart. You can look as if it's a startup and say, okay, we've got all this money that we've been putting into robotics, got all this money we've been putting into Optimus, all this money we've been putting into, I mean, literally, I don't know what the estimate would be. We've been putting something over $1,000 per car into the FSD chip and the cameras since, I don't know, for 10 years.
Not a small investment, is it?
Not a small investment
Yeah.
that's been made in this robotaxi future.
That's right.
So you could just, again, show your dip going down, 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 down of the investment. And then at some point, we would expect it to swing up. And theoretically, Elon says that'll be the fourth quarter of next year. That'll be significant, a significant contributor.
Imagine what the profitability of Tesla could be if they weren't doing what they're doing, if they just were happy being a car company. Right. You wouldn't have the R&D spend.
Yeah,
You wouldn't have the massive CapEx spend, so depreciation would be lower.
right.
Right. And then what you just mentioned, which escapes me right now, I just had it, but it's gone.
Oh, you wouldn't be spending all the money on the FSD,
Thank you.
the cameras. Yeah, yeah.
Thank you. Yeah, you wouldn't need to make that investment in the vehicle.
Right.
So your cars would be more profitable there, or you could sell them at lower prices and drive volume growth, perhaps.
Right.
Right. Reducing the cost of the car to the consumer by $1,000 could be meaningful, right, in terms of attracting buyers.
Mhm.
So, that's an interesting thought experiment. So you could actually have a much more successful car company in the near term if you
Right.
weren't making that kind of investment. But then for what?
Yeah, yeah,
Right? You're going to cede the future to somebody else that could develop autonomous driving.
right.
Right? In that case, you might be giving the entire opportunity to Waymo.
Well, and this is, of course, what these other companies are doing right now. They,
Yeah.
Mary Barra comes out the other day and says, "Well, our North Star is EVs, but we're not spending any money on them. We did, but we're not now.
Yeah.
And we're going to really make sure that we sell a lot of combustion engines over the next few years. And we've seen this play out before. We've seen it with Sears. I think that maybe that's the best example of a company that fiddled away over 25 years by sticking with their knitting while
Yeah.
the world was changing.
Yeah.
It was a crazy thing to watch.
It's hard to not do that when you've got profits you want to protect.
Yeah,
Because then if you're the CFO and you say, well, my bonus is tied to the profitability or whatever metrics they have for the company,
right,
or the CEO as well, why would you stick your neck out and go into whole new markets?
right,
That's a pretty risky thing to do. And it's going to, tank the stock in the short term.
right.
Because you've got Wall Street analysts judging you on certain metrics, and suddenly you're saying these metrics are no longer important anymore.
Mhm.
And they're scratching their head saying, no, they're not. We think they are.
Yeah, right.
But they're not if you go to a whole new business model. You've got a different set of metrics for those. And one of the metrics for how successful Tesla is going to be in robotics and AI is how much money they can spend today and how effectively they can spend that money. It's not just the total dollars, but
Right.
how effective can they be at that? We won't know for sure how effective they will be, but we can see certainly signs today that they're putting it in the right places to give them a chance to be effective with that spend. Whereas other auto companies aren't even doing that. They're just ceding that opportunity to someone else, whether it's Tesla, whether it's Waymo, or somebody else.
Yeah, I think it's also worth noting. I think Tesla Boomer Mama needs another shout out. Everybody expected this last night. We talked about it on my channel with who was on last night? Oh yeah, Brian Wong. Because it's all mixed up right now because everybody's on vacation. So Brian was on last night, and we speculated that Tesla Boomer Mama would grab the banner, would grab the flag, and lead the charge to put together a resolution to go on the ballot on November 6th. That would be to purchase X number of shares of XAI, having the Tesla Corporation buy X number of shares of XAI. So she has indeed this morning taken up the banner, and she's calling on everybody that has more than $2,000 of investment to give her a shout out, to hit her up and let her know that you'd be willing to, I don't know, sign up, sign on. I'm not sure exactly. Maybe they want a certain number of people to be agreeing to the ballot before it actually gets there.
The more people and the more shares it represents, the better off it is, the more likely it'll be considered.
Right.
For sure. Yeah. Yeah, that one's interesting. Tesla needs its own capital for its own purposes.
Mm-hmm.
And while 36 billion in cash is a big number, depending on how quickly they want to ramp out robotaxi and build cybercabs and build robots, they may need a good portion of that money, if not more. Now, Elon on the call last night, or the CFO as well, did say that once they have a business model, you have no problem getting debt financing for that. Right.
Well,
So,
Tesla has no trouble getting debt financing anyway.
yeah.
I mean, they have almost no debt, all that money in the bank. So you can raise money, you can raise it from debt, or quite frankly, if Tesla wanted to go out and raise capital in the regular markets again, they could do that. I'm sure Elon doesn't want to do that because that would dilute his shares as well as others.
Yeah.
But it would certainly be possible if that was the key. I think we've done some numbers on this. I think that Tesla could basically pay for the vehicle in about 5 months. So
Doesn't take long.
I'm not sure that's even an issue.
Right.
You just put it out there. If it can do 40,000 miles a year, I think that's what 40,000 miles paid revenue a year. It could do enough revenue, I think, in 4 months to pay for the vehicle at $2.
Randy, they're going to have to hire millions of safety monitors
Yes, it's a safety.
to sit in the vehicles, and they're going to have to hire millions of teleoperators in case the vehicles get into trouble and they have to drive them.
Yeah, at least millions. At least millions.
Yeah.
It was a throwaway line yesterday, though, where they said if they didn't have regulatory approval in California in time, they might have to put drivers in the driver's seat.
Yes.
As they roll it out while they wait for the regulatory approval. So that was quite the throwaway line.
Yeah. Yeah, well, see, I did think, what did you make of Elon's comment about by the end of the year being operating robotaxi in areas that account for about 50% of the US population? By my account, that's a fair number of states. I think you need at least 8 or 9 states to get there, in combination with states that are kind of regulatory friendly or close to it. And I did a post on X last night about that really quickly as Elon mentioned that, but I thought that was interesting. That's a pretty aggressive rollout.
Yeah, so Brian and I talked a little about this last night also. I think if you take Texas, Florida, and California, you're talking about a massive amount, massive percentage of the US population. I'm not sure what percent that would be, but you only have to throw in, I think after that, you're talking about Atlanta. He already mentioned Arizona and and Nevada. I mean, Arizona, Phoenix now I think is in the top 15 largest cities.
Well, here are the numbers that as I discovered last night. So if the goal is to cover roughly 165 million people, half of the U.S. population, Texas, California, Florida, Arizona, and Nevada would be 103 million of that.
All right, there you go. Wow.
Okay,
Yeah.
just those 5 states.
Right.
Okay, so that covers about 30% of the U.S. population in those 5 states,
Yeah.
but it falls short of the 50% target.
Right.
So in order to get to that, you need another, 60 million or so, 60, 62 million people, and you need AV regulatory environments that are functional.
Yeah.
So that leads you to states like New York and Pennsylvania,
Hmm.
Illinois, Ohio, Georgia, and North Carolina. And if you got all that, you'd be at about 161 million.
Hmm.
Now, to me, none of those are a slam dunk, but according to Grok, all those states like Pennsylvania supports AV testing with safety drivers.
Hmm.
New York permits it with safety drivers. Illinois has AV testing laws and is expanding regulations. Georgia supports AV testing in Atlanta,
Hmm.
right? Waymo's already there. Florida certainly has minimal restrictions on autonomous vehicles. Florida's ready. Arizona has a self-certification process for autonomous vehicles. So, it's looking pretty positive, but to get to the 50%, that's still, it's not easy. By the end of the year, too, Randy. This
Yeah,
wasn't,
by the end of the year. Well, so then
yeah,
I've also had this kind of a meme that Tesla doesn't have to be better than humans, it has to be better than Waymo. So if they can statistically prove that they're better than Waymo, they should be able to go into New York, Philadelphia, and Atlanta
yeah,
because Waymo is already in Philadelphia, New York, and Atlanta.
right.
So I think they're still testing in Philadelphia and New York, but I think they've
I think
rolled
that's right.
Atlanta. So
And they're
so
testing in Miami, too. When I was there last, I saw Waymo, and I think Zoox were testing there as well.
yeah, and I think Florida is one of the easier ones. Pennsylvania, they've decided that they want to be the capital of the AI revolution. They want to try to take away any chance that Texas or California ends up being the center of all of that. I think they have an uphill battle, not against California, by the way. I think they have an uphill battle against Texas
Yeah.
because Texas is number one in energy in the country, which is a sad story for California to allow Texas to be number one in energy. But they are in solar, in wind, and in oil, all three. I don't know about natural gas. That might be Pennsylvania.
Could be.
Yep. Yeah.
Um, yeah, so that's interesting. And this comment about being in 50% of the market, so it's equal to 50% of the US population, to me, it was interesting, particularly in light then of him sort of backtracking a little bit on expectations for Optimus.
Yes.
100,000 a month by 2030.
No. Oh, yeah.
That,
Yeah. Right.
right? So 5 years from now, a run rate of 1.2 million, which to me seems like a ridiculous number. In terms of vehicle equivalents, it's like 240,000 if you make 5 Optimus for every one car. And actually, it could be way more than that, right? It could be like making 120,000 cars.
Right.
That for Tesla is kind of a drop in the bucket,
Makes no sense. It,
right?
it makes zero sense. That would be one factory in the United States.
Yeah,
Soon as you add a couple more factories around the world, you're already at 3 million. I mean, I have no, because again, he was talking earlier, he was talking more like 100 million by 2030, and now he's
yeah,
dropped it all the way down to a million.
right.
Uh, something smells.
Something's weird there, and that feeds the conspiracy theory that he's just talking down his compensation package.
Right, exactly.
He doesn't want the share price to go too high before that's set.
Yeah, he also mentioned, and others have mentioned this idea of the rule of 10, the 10x rule, something like this, that they can 10x it every year.
Yeah,
So talking about 10,000 this year and 100,000, well, even 50,000 next year, 500,000, 5 million, 50 million. I mean, I'm
they're
sorry.
all they're all doable numbers.
Yeah.
Now, I understand that there are some issues with actuators and
Yes.
planetary roller screws and all that stuff, but to me, those are kinds of issues that could be worked out in 2 or 3 years. It
Yeah.
wouldn't take 5
Right.
to work that stuff out. Um, So that was curious for me because he was, I thought, pretty optimistic on robotaxi rollout. Although the one thing that bothered me there was this comment about when asked about personal vehicles going into the fleet,
Hmm?
he made a comment something like, "Well, we haven't really thought about that."
Yeah, right.
And it's like, "Well, you've been talking about that for years, Elon. What do you mean you haven't thought about it?" So that was also a bit strange to me.
That was a bit strange.
Yeah.
Oh, all right. Well, I guess we should wrap it up here. Keep on buying. It seems like a good price. We'll see if we get the 3 day rule. You know, the 3 day rule for Tesla is that sometimes people don't get it when it's actually being talked about on the day, and then 3 days later we get a reversal. So we'll see if Friday, Monday we get a reversal. So you'll need to buy today if that's going to happen.
The reason, Randy, is that people haven't seen your show yet, so they have to watch it, and if they watch it late on Friday, they can't act on it until Monday. So
All
yeah,
true.
I'd give it till Monday.
All true. 100%. All right, CERN, as always, we appreciate you coming on. And for those of you who are watching this on a Thursday night, you probably want to go back and check out what Larry Goldberg had to say about the earnings call earlier tonight. I'll put the card right there. Thanks again, CERN, and to all of you out there. It's been great talking to you.
Thanks, Randy.